manufacturing accounts. And in this module, we will be discussing a practice scenario where we will prepare a manufacturing account without work in process inventory. All right? Just to make something easy to understand. In the next module, we will put work in process inventory there as well. Okay? So let's see that we have to prepare cost of goods manufactured of Sindhu Sports for the year ending 31st March X9. Opening and closing work in process inventories do not exist in this reporting period. Okay, we agree. So the information with us is stock of raw material, opening inventory, means the opening balance, closing balance of stock of raw material purchase that we have purchased during the year, carriage inwards, direct manufacturing wages, royalty at production stage. This is the other direct cost, okay? Because we can identify this at each cost unit level. Then indirect manufacturing wages, factory building rent, depreciation of plant and machinery, and other indirect factory cost. Okay, so all this information we will be using in preparing the manufacturing account. Here we go. Sindhu Sports manufacturing account is here for the year ended 31st March X9. Direct material consumed is the first information that we have to work out. This direct material consumed will be worked out with the help of opening inventory of direct material. Okay, so we see the opening inventory of direct material is 1500 here. Place it over here. Then purchase of raw material 24,000. This is purchase of raw material 24,000. Place it over here. Carriage inwards. This is carriage inward. Place it over here. It will make it 25,000. This is the total amount of purchases. Add in the opening inventory, and closing inventory of 2100 will be placed here in the inner column, so that we are having 24,400 as direct material consumed cost. Okay. Then we have to put direct labor cost. Here is direct labor cost, which is the manufacturing wages, 40,000. We'll put over here. And then other direct cost. This is that royalty, okay, which we can trace with the individual cost unit or the product. Make total of these three items. You get 69,400. This 69,400 is the prime cost. So this prime cost will be added in the factory overhead cost. When we say factory overhead cost, we have indirect labor 12,000. Here we go. Indirect wages 12,000. Then factory building rent 18,000. This is here. Then depreciation of plant and machinery 2,000. This is factory related depreciation. Now once we have grouped it over here in the production function, now this depreciation will not be shown in the operating expenses. Okay, because this was factory related depreciation, we will place it in the factory overhead cost. Then other indirect factory cost is 10,500. It is over here. Okay, so our factory overhead cost working is complete. Place it in the outer column. Add with the prime cost. We have total factory cost of 111,900. 111,900. By the way, if there had been any opening or closing work in process inventory, that would have been worked out over here. Since we have 0 opening and 0 closing work in process inventory, therefore the total factory cost is our cost of goods manufactured. Okay, So this is all about this manufacturing account. So the important tips to remember in this module are that correctly identify the nature of the expense head. Okay, on which like it is based that if this is wages for production, it will be taken to the production function. If there are wages for sales staff, those wages will be taken to the selling expense. And there could be wages for the administrative staff. Why I'm emphasizing on this point? What happens that mostly people say wages, okay, wages to be taken to the cost of goods sold. Wrong. Just see the concept. Is this the wage of the person working in production function, or this is the wage of the person working in the sales department? So accordingly you have to identify. Okay, next comes factory overhead should be worked out carefully. Depreciation, as we discussed, that depreciation doesn't mean that by the name of depreciation should be taken to operating expense. No. If depreciation belongs to the fixed asset which we are using in production, depreciation of that fixed asset will become part of the factory overhead cost. Okay. Then store rent. Look, we have to store our raw material or material and supplies. And in the same way, we have to put our finished goods in the godown or warehouse. So that is also a place for storage. The rent that we pay for the store where we place our material and supplies is the rent that we will be grouping in the factory overhead cost. Whereas the rent that we will be paying for godown or warehouse of finished goods, that rent will be a part of our operating expense. Okay, will be taken over there in the selling expense normally. So these were the important tips to remember in this module. Thank you very much.